Hello and welcome to Electripreneur Secrets, the Electrician's podcast. We're here with you 5 days a week to help you master pricing. Master pricing. I did it, Joe. I dropped it. Master
You
sales,
finally did
simplify
it.
pricing,
You know
and
what? We're
deliver
gonna applaud
premium
that
level
one.
service. As you know, we got rid of the fancy shit. I say the intro and outro every day, and sometimes I joke about eventually messing it up. Today was that day. And
That's awesome.
I think it was semi-intentional, subconscious level intentional. Here's why. I said master pricing, and today, what are we talking about, Joe?
We're actually talking about money today.
Talking about money. So that kind of made sense.
Money.
So today we are mastering pricing and simplifying sales. How about that?
That works.
Backwards.
It works.
It'll go. How you feeling today, by the way?
I'm feeling great because we were talking about what songs remind us of money. And the only thing that's come on top of mind is Pink Floyd. Doom, 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 ching. I love it.
Yeah, absolutely. Yeah, that's what was ringing in my head too. But before that, you were singing money, money, money. Oh, hitting the high notes. There he is, even with a cold.
I
Joe,
know,
how
right?
is the cold doing? You
The
surviving?
man cold sucks. Not gonna lie. As they say, it's not fun. Some people are like, oh, it's just a headache, and then you're like vomiting into a waste paper basket, which isn't fun. So you know what? The point is, I'm here. I'm showing up, and it's more important that I'm here with you guys than I am curled under a blanket. So
We appreciate
good,
that.
man.
I appreciate that. If you appreciate that, even though we can't see you, go ahead, raise a hand, say, I just appreciate Joe for showing up here. Presenteeism, sick or not, here to help us in our journey to master sales, simplify pricing, and deliver premium level service. I got it right that time.
There
As
you go.
you
Twice
guys
just as
know, we're
nice.
just a couple of master electricians with business addictions here to help you out. And today, as Joe said, talking about money. Money is a great thing, can be a very scary thing, can be
Mhm.
a very painful thing, can cause a
Mhm.
lot of emotion, can cause a lot of problems.
Mhm.
But whoever said money is evil, I disagree. Money's
Yeah.
just a tool, right? And there's so much else in our life that can hold a magnifying glass on the problems that come from money. But ultimately, when we truly accept and get to know it as just a tool, then
Mhm.
we can receive it in abundance and get rid of this scarcity mindset. So I want to kick this off with that little kick of knowledge, but also in saying, have you ever heard this before? Cash is trash, cash flow is king.
Yeah. It makes a lot of sense.
What do you think about that statement, Joe?
So people sometimes say like cash is king because they try to say like it's an old style of money concepts where you could say, oh, I give them cash and they're going to give me a discount, or they're not going to tax me, or they're not going to. Everyone assumed that cash was great. But if you're sitting on a pile of physical paper money, you are literally losing out significantly on interests, on flexibility, on liquidability, and even on protection.
Inflation?
Inflation,
What
you're
is
right.
inflation right now? What are we shooting for in the States this year?
Oh God. I was gonna say, I mean, if
Was
you
it
told me that inflation was anywhere between 8 to 11%, I wouldn't blame you.
right? It's crazy. And in some
Yeah.
other places, our website developers currently working on Argentina, 9% a month, if
Yeah.
you can believe that. So there are worse economies, people. Now, we're not here to just be doom and gloom, but that
Mhm.
said, cash is depreciating.
Yeah. It's really not what it used to be. And if you think about it, it's also a very big liability. Because if you think about it, let's say you had, I'm going to round numbers, right? Let's say you had $1 million in cash. Very few of us do. Let's even go down further. Let's say you had $100,000 in cash and you had it in your facility and something burned. Believe it or not, you don't just get the money immediately. You have to file for that. You've got to go through insurance and you've got to prove that that money was there and that you're not doing some sort of insurance fraud. So what you thought was a huge flexibility, you're actually down to zero and you have to fight to get it back. Whereas if it was in an FDIC or federally insured account and something happens, the government will back it up. So cash is not something I want to carry anymore.
Right. Now, even if we were to be smart, maybe safe with that, open a savings account. Guys, if you're thinking Mike McAllowitz, profit first, don't worry. We're going to get into all sorts of that stuff today, too. But if you're one of those thinking, hey, savings, high interest yield, I'm going to safely invest my money in a place where I still have control. It's linked to my
Hmm.
account. I can continually contribute there and maybe have a 2 to 4% yield, maybe 5% in extreme circumstance.
Hmm.
We still have to recognize while that's better than sitting at nothing, it's not currently beating inflation.
Hmm.
So that money is still losing value. That doesn't mean these efforts are fruitless, though, does it?
Correct. Because if you were to take just any money and go to your local bank and you were to put it into some regular savings account, you're going to get like 0.08% interest. But how many people, you mentioned earlier, the online high yield accounts? You want to talk about what those even are?
Yeah, sure. Dig into it a bit.
Yeah, I was going to say, so a lot of us remember banks being brick and mortar stores, whether, Chase or Bank of America or whatever it is. You physically went to a location, the money was in that location, you put a withdrawal in, and they gave it to you. That's really what it was. But because there's so many logistical concerns in running a business, which a bank technically is, they had to pay the rent, they had to pay the lights, they had to pay the staff. There's all those things that go into it. So as a result, you lose out on the interest. Now that online banking is such a common thing, there's something known as high yield interest accounts. They're usually FDIC, which is federally insured lines, meaning that if the government or if something were to ever happen where that money tanked or we had a real problem, the government actually insures it against calamity. But the benefit is because they're not brick and mortars, they don't have those same expenses that go into running it. There is very little staff, there is no physical store. So the interest that they are able to give you is significantly higher. Like if you're talking 0.08% as typical bank, most high yield interest accounts are at 3 to 5%. Think about that. 3 to 5% for just sitting there. That's crazy, right?
Significant. Now, I think the challenge becomes for a lot of us, well, what if there's not much sitting there?
Ah,
And
that's the
here
thing.
here lies the challenge, right? So ahead of that cash savings and having that interest yield, high interest or other, we actually do need to master this cash flow principle.
Hmm.
Hence why pricing, simplified pricing, one of the things we help with, ensuring that you're increasing rates to amount that's stimulating your supply and demand balance for your service. And guess what? If there is no demand, up the service and that too will
Hmm.
come. There's a few problems I'm unpacking here though, and maybe too much, but let's just start with the cash flow issue because
Hmm.
so many contractors are facing this, Joe.
Yeah.
You're coming in end of the year and it says, hey, we've got 150K, maybe 200K in profit. But then you look at your accounts receivable and you're owed 250K.
Which means you're sitting on a big old nothing at that point.
Breaking even, unsure when that money's coming. It was net 90 and now they're not answering your calls. This
Hmm.
is not a rare occurrence. We're talking to people that are in this situation every week of the year.
Hmm.
And that is some of the crap that comes with projects. It's
The dark
unfortunate.
cloud.
The last time I ever hear people brag when doing a project, and don't get me wrong, I'm a project guy, invested, PMP project manager right here in the flesh. I've gone to university for training in projects, but it never did give me that fulfillment. And the last time you ever hear someone brag about a project is when they receive the award and they brag about that big revenue number. Ah, we got
Hmm.
$1 million project. We're booked for the year. But think about all the inherent risk with that. Likely net 60 to 90 terms, right?
Yep.
So you're doing today's work, tomorrow's work, the next 2 to 3 months' work without any pay. So you got to float that on your back, right?
Hmm.
Demand for extra insurance just in case, right? Larger workforce, lesser training and quality for that larger workforce,
Hmm.
less reviews, less diversity of customers. And we've talked about that before. How do
Hmm.
we get rid of risk? Diversification. If one client
Exactly.
owes me $1 million, isn't that kind of risky?
Yeah, because the thing is all it takes is that customer to give you a problem. And now all of your money is in one basket. Whereas instead of going, and this is why I went into residential service rather than go into heavier into commercial or new construction or industrial, was because if you had one job that gave you $100,000, I would actually rather 10 jobs that gave me $10,000, because all it takes is one to bust and I still have the other 90,000. It's ready to go. But if that $100,000 job busted, we'd be screwed. In fact, actually, can I talk about a personal experience where that actually is relevant?
Absolutely.
So there was a period of time when we actually wanted to get into heavier commercial, specifically because of this chasing the big revenue. And one of the biggest presentations I did was for a $500,000 actual awarded job. And it was a chemical factory, and we were going through, we were checking everything out. And we're like 2 months into this bid at this point. Like, and I had escalated it further by getting it the person who actually could sign the check on face to face with them. And we actually were going to get it awarded. That was the thing. They were like, yes, we are going, we're really strongly considering you and one other person.
Yeah.
But when I realized that there was a huge risk if they didn't actually pay, or us having to front it because they weren't going to give us a deposit and all that, we actually backed out and said, you know what? This is not an opportunity we want to consider at this point. And they said, you actually were going to get the job.
Wow.
But the fact was that I'm so glad that I didn't take it, because we ended up filling the entire calendar for the whole year with other projects. And it actually ended up being one of our most successful years getting out of commercial.
You know what? There's this saying, and it goes like this: humans are endlessly capable of recognizing what you lose when doors close. I did the wrong gesture there. When doors close.
Yep.
But we're infinitely incapable of recognizing what opportunities may come from closing those doors and opening others. We do not know. It's called loss aversion, and it's the very thing that keeps us at the casino.
God,
It's
that's
just
true.
when you can see it and you still know there's just an opportunity right there, you'll just keep digging deeper and deeper and deeper and deeper. Or imagine being in that place and then going, oh, all we need is another big project. Excuse me. One other big project would solve this because they'll pay us in a more expedited manner. Guys, if you're going through this, can I just say, I've felt these pains. I get it. And I feel for you, right? My first business suffered deeply from this, deeply huge problems, right? We talked about that on a different podcast. Cash flow, diversity in clientele. This is the same thing mutual funds do with the stock market. Diversify risk by going through a variety of different investments. If you looked at your clients like investments, well, then we're back to what you just said, right? You have diversified risk, more chances to have optimal outcomes, more chances to have optimal reviews, more chances to have optimal and organic referrals, good neighbor program. If you really put your mind to this service game, so many opportunities come from every single call, every single job. Please jump on in. Yeah.
I actually want to stitch even further into this, and I don't want to go too far down, but it also, I look at it almost like compounding interest. Because if I have one job and I do that job perfectly, what are the odds that commercial facility is going to refer me to another commercial facility?
You know
Not
what
really
happens?
hot. They're going to keep me under lock and key. Like, they are going to be like, you are our guy.
It goes like this. Here's what went well. Yeah, that's fine. Let's move on. Here's all the things we can improve on next time to make it better, faster, cheaper.
So you're in that circumstance where you get this job, and even batting 1,000, the best thing you get is another job from the same people. Whereas if I were to have 10 customers and each one of them gives me a good one, I still again have 10 other customers, but with residential, they're going to refer you to other people. And you have the opportunity of getting a compounding interest from it. Where if I get one client and that client gives me 2 clients and that client gives me 2 clients, suddenly now I'm sitting on 1,000 clients and didn't even realize how I got there.
And we just came full circle and bridging to a very important aha moment. If you land $1 million commercial job today And we've all accepted and agreed there's roughly a 10% inflation happening.
Mm-hmm.
Doesn't that contract suffer? Say it's a year-long contract. Doesn't that contract suffer the same inflation? So by time you're done
Mm-hmm.
and getting paid for that old money plus net 90, you could be 12% shy in the value of that cash flow at the time that you receive it.
And that's insanity. Because who would
Ouch.
bill in for that, right? Do you have to bill in for inflation into your bids at this point?
I mean, technically you should. Now, speaking of this cash flow problem, right? We've already established, hey, this is Monopoly night with the family. You run out of
Mm-hmm.
cash, close your eyes, you're going to bed early. That's how it works, right? Your
Mm-hmm.
business needs cash, your personal finances need cash. Call it A money, B money, and C money. We'll get back to that in a moment. But this cash flow, the nice thing about a business, and the only other thing I'll touch on here is real estate. These are two investments, two assets that
Mm-hmm.
produce cash at today's rate. So this is big support for the service game, because if I can do a job today that only takes today at my full rate that I've reassessed every quarter since I've been in business to make sure that I'm always charging what my business needs to grow and be sustainable, that's cash flow, Joe, isn't it?
And it's the best kind because it's managed cash flow.
Now add one more thing to this, your favorite, 50% up front for a job we're going to book just a week from now, 2 weeks from now.
Love
Now
it.
what's happening?
The benefit there, and I love that you put me on the tee for this one because
Teed you up. Let's
I
smoke
love
it.
talking about deposits. So what you're doing is you're getting paid in advance, but you can take that and allocate it to other things. So like let me give a practical example of how this applies. So we've always talked about generators, and that's a consistent thing that comes up. But the benefit of getting a deposits on generators is that it's a capital improvement, which means that your customer has a situation where they're not being taxed on any of the services that go into play when you do the initial installation. So, following that logic, what you can do is you can actually package all the upgrades, all the enhancements, and all the maintenance packages under one bulk quote, get it qualified for capital improvement. The customer is actually not paying tax on future services, and they are more incentivized to give you a much larger deposit than they normally would have been. If they say, I'm going to go year by year, you're the only one losing because you're paying one, inflation rate, two, you're paying tax on it. So, am I wrong to want to save you that kind of money? And the
Not
answer is
at all.
always no, you're not wrong. Here you go.
Yeah. Man, I love the way your brain works. So again, man, full circle. Cash is trash. Cash flow is king. We got that. Today's rates, that's important. If we can get paid today during today's value of money, currency, then this is a win, isn't it?
Damn right.
Awesome. Okay. So here's the thing. We were going to talk about and tie in this principle of A money, B money, C money. And I wouldn't be
Mhm.
doing justice if I didn't do that. I
Hit
may
me.
have said this before, but hang with me, guys, because this one is important. It will actually change your life as it did mine. A money, that's today money. That's what's putting food on the table, roof over your head. It's the money that you're earning and then you're spending just on survival needs, physiological
Mhm.
needs, right? B money. B money is the money we're investing, our little cash soldiers, to go make money for us.
Mhm.
Mutual funds, the high interest yield accounts, any stocks, any other investments you're making, even real estate could be considered B money if you're in a passive position with lots of cash and someone else is doing the work.
Mhm.
But then there's C money. C money is really important because that's the money you invest in yourself, your own growth. This is the money that you may have heard some of your own mentors say, that's the stuff they can't take away.
Yep.
That's the stuff that pays dividends for a lifetime. Like us, many people may wonder how we came about the knowledge that we have, the
Mhm.
sales that has been achieved, right? The growth that happened here for a couple of young master electricians with business addictions.
Mhm.
And it's that business addiction piece, it's that constant event investment in C money. Would you say that you made up most of this sales, Joe, or did it cost you a little bit to get here?
It cost me an insane amount of money to get here Because when you think about it, it wasn't just going to conferences and traveling and listening to podcasts. Like there was a lot of that was going into it, but I was also really invested in schooling and getting personal mentorship from anyone who'd be willing to talk to me. And because I needed so much help, also therapy is training as well. It's making you better people. And I wouldn't be the person I am if I didn't invest years and years and years into therapy.
It's
So
7 years of
between,
coaching yourself too, right?
yeah, I've been coached for over 7 years, just doing it from one or two personal trainers. Like that's the thing. It's one of those scenarios where if you don't put money into the machine, the wheel doesn't turn. And you always need to be rolling the wheel forward because life moves in one direction. Either you're moving with it or it's going to move without you.
Yeah.
So what are you taking away from it?
So this becomes a really interesting conversation. And some of you I expect to go, holy fuck, that makes perfect sense. I've had people when I explain this for the first time on a call go, their mouth open and go, oh my God. Wow, I never realized that. So I really want to help you guys with this.
Mm-hmm.
If you have a business, you have a tax advantage, right? My accountant always says this, you're making money, you're paying tax, it's a good sign. I hate
Never
that.
feels like a good
I
sign,
hate that.
doesn't
It
it?
never feels like a good sign when I'm giving
Never
money away
feels
for
like a good
tax.
sign.
Here's your tax advantage. It's actually a timing advantage, guys. Let me explain this to you very simply. It's the best I can do. As an employee, you earn, your employer decides, okay, this is what you've earned for said period. They tell the government what those earnings are. They agree on following the income tax tables, and they deduct what you owe the government and then pay you what's left. So you earn, they deduct, you get what's left.
Doesn't feel
Right?
like a lot of fun.
In business, or even as a sole proprietor, some people get in trouble with this because they don't save for taxes. You take everything. You spend, you have your expenses, you pay the balance of profit, of tax off your profit to the government. So if you don't save that, if you don't have an accountant working with you, people tend to get in trouble. And then the next year they go, it's almost like you wanted me to save my taxes. But they did. They did. You have that advantage. It's a tax timing advantage. This is why accountants can be the difference and save you tens of thousands, maybe for some businesses, $100,000+ a year. Let's talk about the expenses for a second, though. There's one line item in particular that ties perfectly into C money. It's called professional development. You, as a business owner, can invest from your company into yourself. You can spend, right? And here's a real double benefit. People in our program, they put a certain number there, and the number I recommend is actually $30,000 a year for your personal and professional development.
Mm-hmm.
Why? Because if you have that number there and you honest to God spent 30K a year, where are you going to be in 10 years? I've spent about 200K on my personal and professional development. What would you, if you had to guess, Joe, where are you at?
Oh, let's see.
And while you're calculating, I'm going to
Yeah,
continue
give me a
this,
second because I'm going to give
this
you an
pitch.
actual number. I'm just going through it in my head.
So here's the crazy tax benefit, though. That was not out of my personal pocket. I didn't earn money after the government took their share and then pay $200,000. I earned money through my companies, offset by having them write it off as an expense. And they trained me through the various coaches, trainings, academia, MBA program, PMP, project man, all the stuff that I've done over the years, leadership trainings. That was all tax deductible. So the savings is right around 30 to 40%, depending how much you're taking personally in a year. That is a massive, massive lever in your life. And here's the added bonus. As I began to mention, if you take that 30K a year, 25K a year, whatever you're comfortable with there, add it to your burdens. And when you're solving your rate, now that's on the back of each and every customer that invests in your business, because they're not just clients, they're stakeholders. When someone puts cash into your machine, they become a stakeholder. They've got a ticket. They hold the value of your business and your goodwill. And so every person in every hour that they hire you, every billable hour is
Mhm.
contributing to your professional and personal development, that 30, 25, 30K a year. And so in 10 years, your company is going to be the exact kind of business that they would still stand behind.
Mhm.
Oh my God. Okay, Joe, tell us.
I got the numbers. So going through just basic, and I say about 7 years of training, going to events, studying under teachers, going to college, going to trade school, just rough numbers, I'm around anywhere from 135,000 to $145,000 in personal investment.
Not bad. I want to see that go up by about 70K in the next year or so.
All right, sounds about right.
So, guys, you getting the point here? That's C money. No one can take that from Joe. You guys listen to him 5 days a week. No one can take that from me. You listen to me 5 days a week. Barring any cataclysmic events, my C money will take me right to the age that I absolutely want to work until. And that's
Mhm.
undecided. I'm not sure I need to. Maybe I get my Mexican villa in 3 years, not 8. I'm not
Mhm.
sure, Joe. I'll probably be contributing to this community till I'm 80, so long as I
Honestly,
have my health.
I wouldn't want to do anything else because if you think about it, and I don't know if this is going off topic, but this industry has given us so much. And one of the reasons why we're so invested into it is because we feel like if we don't put into it, who will? Right? All these years of training and skill and knowledge and sales and all that great stuff, if we just sit on it, we're no better than dragons just sitting on a pile of gold. We need to share what we've been given. And that's why we're here 5 days a week, giving you guys a free podcast where you can learn from us without putting a single dime into it. And I'm grateful to
Absolutely.
be in that situation where I can help you guys.
Absolutely. You know what? I know we talked about going into profit first. It might be a second. I mean, we're going to have a series of cash
I'm
talks
down. I'm
because
down.
there's so much, and I fear always overwhelming people with information in a single one. But suffice it to say, just as an intro to that one, guys, I love Mike McAllowitz and his books and everything you
Mhm.
guys done. Brilliant mind. I appreciate brilliant minds. I do, especially as a business strategist junkie. Like I just
Yeah.
live for this stuff. But if you're familiar with his book, then you're familiar with having 5 bank accounts. And that's one
Mhm.
place that I tend to pivot a little bit in the recommendations I have for our clients and friends inside and outside of the group, just because complexity is the enemy of execution. And
Mhm.
most business owners are struggling with their 1 to 2 accounts. Really, it's overwhelm, right? So until you have that help, until you have systems in place, that can be a bit much.
Mhm.
He's got some great principles, such as the 90-day nest egg, and then how to profit share from there. And some of that stuff that's just going to be so fruitful. I think this is just me teasing it. I think we got to save that for a second episode. What do you think?
I think that would make a lot of sense because, like, going into, well, what are those accounts? What are they there for? Why would you want a tax account? Why would you want a material account? Why would you want, like, there's so much that goes into it. You're right. Unless we're sitting here with an hour or 2 hour long episode, it's not gonna be worth getting into right away.
It's not today. But you guys, I trust that you got some significant value from what we've already talked about today. I want to give you a little bit of guidance out of this and not just dissect a problem and leave you there. The
Mhm.
C money was a huge takeaway, granted. But if we touched on a big problem here today, and I got to give a little bit of solution for this, if you are a contractor who's currently stuck in the debt of cash flow, stuck in
Mhm.
AR land, unable to collect, guys, there's a couple nuggets for this. Okay. One is if there are people that are just ghosting you, they owe you money. I don't care if it's a small client, a big client, anyone. They are just people. And so I got to give you this little action, this little tactic. It's annoying to you to even have to reach out. No one likes to impose. I'm mad at
Mhm.
them. They owe us money. They're ghosting us. I don't even like talking to them. I just want to be rude. I want to yell at them. That's not going to get us anywhere. I get all these feelings. Why are they dogging us? But I can promise you a couple of tactics will really help you out in this situation. One is
Mhm.
consistent outreach. If you can't do it, hire someone to do it. That's how debt collectors get paid. They do
Mhm.
not quit. They're relentless. And you should be relentless too, because the only person more annoyed by this debt than you is them. And that may seem backwards because they're not the ones owed the money, but that weighs heavy on a conscience when they're not paying.
Mm-hmm.
Scumbags are not. So I would follow up, follow up, follow up, follow up. And here's a little hack for a bigger company. If it's just a bookkeeper over there, and if you're, maybe you're an equal size or maybe you're smaller, this can be a tactic that I've seen work in the past, is actually to recognize that it's just a person over there managing the books. And what happens when it's just an hourly employee is they just handle things in the order that they're received. And this is typical of a net 90 business, a machine that's honestly just in constant AR and AP, just paying bills and receiving checks, paying bills, receiving checks. They're in the same battle, but they're bigger. And so they're used to it and it doesn't impact them as much. Does that make sense?
It really, really does.
So pick up the phone, grab it and phone over and talk to Stacy, talk to the gal, talk to the guy, whoever it is in charge of that. And just say this, or get your wife, or get your CSR or
spouse, yeah.
admin, get someone to call and say this: hey, sorry, I'm new here and I need to ask a favor. I've made a mistake on one of our other bills and that's left us short of cash. I see that you guys owe us, we've got 60K in AR. And I know that we're net 90 and it's only 70 days in, but is there any way I could take you for lunch and you could help me out here? I'm new and this is a big mistake. Is there any way you could speed up that payment cycle for us this time? A lot of times, as they say, you get more bees with honey. A lot of times that will do it.
Mm-hmm.
It's a person in charge of that. You need to speed up the cycle. It's that simple. So that's a big action I wanted to give today, as well as, of course, the consideration that if you're in this situation and you keep ending up in this situation, have you considered service? Have you considered?
I strongly suggest you should.
Okay. Did I tee you up for any action items there, Joe? I know I kind of went just off the cuff there, but.
So I actually have one off my mind, and I'm not sure if it qualifies as either an action or an all-star. Can I just take a shot at it?
Yeah. Throw it out there.
Anything that brings you joy, you can use to generate income with. Or if nothing else, you can actually get that knowledge to move your goals forward. And let me explain what I mean by that. So I have a lot of unusual interests. It just comes with being neurodivergent. But the two that particularly come to mind is I love studying languages and I love studying cultures and theologies. And you would think that that's not something that would ever make you money, right? You're like, oh, well, it's like studying philosophy. No one's going to get paid from that. But you can see where I'm coming from here. But by understanding languages, I can respond to people in their language that they're most comfortable with, or at the very least, I can often understand it because I understand a sister language. And it allows you to have an inside gap when people are speaking. That could you see if someone were going to talk in another language at the table that I could benefit if you know what they were saying?
Absolutely.
I think it is. Or if you're studying theology and it's tied directly to a culture or a particular group of people, would it not help you to understand how that culture chooses to operate and the foundations in which they've built that culture? Would that not help you find a way to bond and connect? Could you not share over scripture things that you enjoy? Would that not help you bond with your clients?
Oh, I think so.
Anything that you love, when you can properly learn about it, you can find that it will assist you if you're willing to look at it from a larger 30,000 foot view.
100%. And you know what? I think that was the all-star action. And the underlying, undeniable message there is invest in yourself, guys. Look down that line item, look down your P&L and look for that line item professional development. And you tell me what number's beside it. If it's a 0, then I want you to answer a second question. Where are you going? Where are you growing? Guys, this has been an incredible, insightful cash secrets for electricians episode as we help you, as we always do, 5 days a week, here to help you master sales, simplify pricing, and deliver premium level service. And today's episode is going to help you stay afloat, grow, and sustain that dream of yours as well. Joe, thanks for joining us and for all the tips today. Guys, we'll see you again tomorrow. Looking so forward to it.